Hello everybody and welcome to another episode of Transmission Wine, my small little Sunday sermon to you good people of the internet. Today I'm talking about an oft discussed topic, that of finance. It's going to be a very simple, very basic video today, and it's one I've been trying to make for quite some time, and it's been made possible by my good friends at Lease. They are a finance specialist. Now I must confess, I've never financed a car in my life. So until I started working with them, I really didn't feel qualified to talk about how you can finance a vehicle and what might be best for you. Today we're really going to be looking at 3 different types of finance and seeing how they differ and which one might be right for you when you're looking to purchase a vehicle. In short, those are lease or personal contract hire, PCH. You've got PCP, which is personal contract purchase, and you've got HP, hire purchase. Now, PCH, there is a business version of this, business contract. It is basically the same as personal contract hire. In fact, for today's video, they are the same. It's very simple, and it's very, very popular in the United States. It's becoming more popular here, and for a few good reasons, but there are some caveats you really need to be aware of, and I'm going to explain those in this video. Leasing is very simple. You put a deposit down on a car, not always, but usually. You pay your monthly payments, and at the end of it, car goes back. There is no option to keep the vehicle. In a personal contract purchase setup, similar thing, but at the end of your term, you have the option to either buy the car for often a predetermined sum, you can sell the car, or basically return it to the finance house. There are a couple of things you need to be aware of in that, but I'll get onto those in a minute. Hire purchase is then the most simple of all of them. You pay your monthlies, there'll probably be a deposit as well, you pay your monthly payments, and at the end of that, you already own the car. You've been paying enough to basically make it work out. Now, hire purchase, on the face of it, is the most expensive of all of those, but it is the only one where at the end, by default, you have paid off the car. It is the closest in financial terms to a simple, straightforward loan. If you are looking to buy a classic car or buy a car that you know you're going to want to keep beyond the finance terms, it, for me, is the one that makes the most sense because it doesn't require you to come up with a large lump sum at the end of the term or to give the car back. If you're looking at a sort of white good type vehicle, leasing is probably the best option. There are some incredible finance deals out there. Some of the things that Pendle have told me they do are just crazy. So if you want to get a cheap, decent, runabout car, and they do them at all different levels, I'm not just talking boggo basic things, I'm talking actually pretty nice cars as well, it's worth giving them a call and seeing what they can do, because what they generally have is they'll have overstock. So manufacturers, where they've just made too many cars or dealers have bought in too much of a particular model, they'll go to a company like Pendle and they'll say to them, please, can you help us offload these cars? They'll give them a very generous incentive, which is passed on to you guys. I mean, I've seen cars that they've been leasing for like as little as 130 quid a month. That's essentially nothing. So if you're looking at cheap, decent motoring, that is probably the way to go. However, there are a few things which make leasing undesirable for some. There are mileage limitations on lease deals, as with PCPs. There are not on hire purchase because at the end of it, you own the car, so it doesn't matter how much it's worth at the end. You cannot get a lease deal for more than about 100,000 miles. You also, for this reason and others, cannot get a lease deal if you are a taxi driver or you're going to use the car for professional driving purposes. Lease deals aren't really designed for you to be able to give the car back or sell it mid-term. It's just not how it's set up. It's ideal for someone to keep a car for the duration of the term. If you keep to the terms of the agreement, it's pretty good. You need to make sure that the car is returned in decent and reasonable condition. There will be, with every single lease agreement, a contract which defines what is reasonable wear and tear. I've known people that will collect these cars. I know people that do that as their living, as their drivers for collecting these lease cars at the end of their terms, and part of their job is to go around the car and see what damage has been done. So if you live somewhere where your car is going to get damaged quite often, do think strongly about leasing, or bear in mind the fact that at the end of the term there may be something to pay to make sure that the car is in good condition. Leasing also doesn't tend to work very well for really high-end cars. Basically, I use a 911 as a barometer. Anything above a 911, leasing just doesn't really tend to work. So don't do that. But for sort of low to mid-level cars, leasing is a very, very good option. PCP. PCP is great. PCP is probably the most common and popular form of finance in the country. It works a little bit oddly in some ways. The idea is put your deposit down, usually, pay your monthlies, just like everything else, and at the end you've got the option to buy. Now, one thing you want to look for is a lease deal with a guaranteed future value in it. That's important. Let's say you buy a car for £50,000 and you get then a guaranteed future value of £30,000 after 2 years. So they're expecting the car to lose £10,000 a year. Now, let's just say that that car happens to be really, really unpopular, and at the end of that term, the car's only actually worth £20,000. If you have a guaranteed future value, GFV, as part of your finance agreement, great, no problem. That is the finance company's problem. You simply hand it back to them, and the fact that they've lost 10 grand more than they thought they were, very much their problem to deal with. However, if you've got a car and you don't have a guaranteed future value, you simply have a balloon payment, you're playing a little bit of a game. And it can work one way or the other. Let's just say you bought said same car, £50,000, and you've had it for 2 years, and at the end of the 2 years, your balloon payment was going to be £30,000. So that means that if you wanted to keep that car at the end of the 2 years, you have to pay them 30 grand. Most people don't do that. What you can do is if the car's worth 35 grand at the end of that, that's great. I would use that to buy another car because you've then got £5,000 of equity in the car. Brilliant news. You've been basically saving because you've been paying a little bit too much. If the car is then only worth £25,000, you've got £5,000 of negative equity, depending on how much you've paid in. If you currently have a car on finance and you're not sure how your figures are stacking up, you can simply call your finance company and they will tell you what the sum owing is on your car. So you've got a car that you know, for example, is worth £10,000 and you've got £8,000 worth of payments still to make. That's good news. If you've got a car that's worth £10,000 and you've still got £15,000 worth of payments to make, not so good. But these are things worth bearing in mind. For this reason, if you are the sort of person that does change the car fairly regularly, PCP is probably the best way to do it. The other big piece of advice that I would give you in terms of finance is that for the most part, you do not need to go with the manufacturer's own finance. If you're looking at buying a new car or a car from a dealer, they don't really care how it's funded. Some do, but generally speaking, if they get their money, they don't mind. That's where companies like Lease can come in and give you a much better deal, and they can make some cars that you thought were out of reach actually affordable. It might not work that way. Sometimes manufacturers have deals that, because they don't have to pay a middleman, are just unbeatable, and that's simply life. But there is absolutely no harm whatsoever in shopping around. Once you've found the car that you want, you may as well do it because it's going to cost you a couple of hours of phone calls and it could save you quite a lot of money for the next 3, 4, 5 years. And the final thing I want to say is when you are looking at finance, be honest. Not only is this a legal requirement, but it is very important because a lot of people will be tempted when they're putting finance figures in. You know, you've seen those finance calculators online. They go, oh, if I put £2,000 down and I'm doing 10,000 miles a year, like, oh no, that monthly payment's a little bit too much. Oh, but what if I only did 8,000 miles a year? Oh, that makes the payment affordable. Well, if you know you're doing more than that mileage, for a start, you're committing insurance fraud. Well, it's not insurance fraud. Basically, you are committing a fraud. Okay, it's illegal. You can't do that. But you need to be honest because if you aren't, what will happen at the most basic level is you'll find yourself in negative equity. So you'll have to spend money to sell your car. And that's simply a position you never want to be in. So there we go. There's a few basic hints, tips and tricks about a few of the finance options that are available in the UK today. If you have any more questions about it, please do speak to my guys at Lease. They'll be more than happy to help, or any other approved financial advisor or body. Thanks for watching. Bye-bye.